You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. Be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
Welcome back to TWIFO, This Week in Futures Options, the program where the name says it all. We talk about the week that was and indeed still is on the futures options side of the fence. So we'll talk a little bit of equities, obviously equity options, a lot lighting up over there in the futures options side on equities, including some big events coming up, maybe some ags, a whole heck of a lot going on in the world of crypto, crude, you name it. We'll get to it here on the show. The big movers and shakers for the week over there on CME Futures Options and a whole lot more. My name is Mark Longo from the brand spanking new TheOptionsInsider.com. If I sound a little bit different, it's because I'm coming at you from the Southern studio, at least for one more week here. So bear with us here. Hopefully, speaking of bearing with us, thank you all for being patient with the live streaming. I know our streaming partner there, Mixlr, had a lot of issues over the last week. They were down, they were up, they were down. So hopefully you guys weathered the storm. The stream seems to be working now, so you guys can join us live if you are available. If not, of course, the on-demand working as always, and I know the lion's share of you get it that way. But if you like to be hardcore, you like to get it the instant it goes live, then the live stream should be working for you. Again, no promises because we don't produce that. So we just license it out to them. But it should be working for you. If not, hit them up over there at Mixlr, MIXLR. Say, hey, we want to hear the old TWIFO, and you're not letting us. So hopefully it seems to be working now. Let's keep our fingers crossed throughout the show. Speaking of keeping our fingers crossed, connection, cell phone and otherwise, is a notorious thing there in the Big Apple. But we are joined from there by our old friend, Mr. Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, the gong is ringing, the clock is ticking, the time is approaching, the hour is nigh, sir. It is almost time for Russell Recon to be upon us. Are you there? Are you sweating profusely right now, sir? Are you that nervous?
There's definitely some perspiration, but it's like hot and really humid here in New York City today. I think it's more the temperature than it is the excitement of Recon, which is by itself incredibly exciting.
Yes.
But no sweat from the Recon because I'm excited about it. But it's such a well-known and incredibly historic high volume trading day on our exchanges, NYSE and Nasdaq. That we're looking forward to shattering another volume record tomorrow. So.
Yeah, let's get into it then. You guys listeners, as always, if you're listening live or on demand, you can follow along, play the home game, cmegroup.com/TWIFO, TWIFO. That is where you will find the TWIFO report, which will, of course, break down all this cool stuff that we're going to get into. And if you're into that, you might want to slip it over there on that drop down the top left to the equities, and then slip over to the Russell 2000s, where we're going to start ourselves, because we are going to talk a little bit of Recon, because it is, I don't know if you heard, listeners, it is pretty much the biggest volume day, at least of the planned volume days. There are certainly unforeseen days like the VIX apocalypse of last year, where the market melted down in February and again in October. So those are the unplanned volume days, and they certainly do pop up every now and then. But in terms of planned volume days, I'm hard-pressed to think of any that can top the old Russell Recon. We talked about it before on the show. This is, of course, the big day when all of the Russell indices are reconstituted. We've broken down the dates before. Sean, give us a real quick recap then of what the dates are for Russell Recon that leads us all into the big event this Friday, sir.
It starts at May 10 with rank day, and then culminates on June 28th this year with all those changes that are going to be made to the Russell suite of indexes, 1,000 and 2,000. It's a big day. We talked about this last week, but Microsoft took the top spot in market cap, knocking Apple into third place in market cap, and Apple had been in that top spot since 2012. So some interesting dynamics happening along those lines. There's some high-profile, what we like to call additions to the freshman class that should be entering the Russell 1000 this year. Those being Uber, Lyft, LYFT, and Spotify, SPOT. Excited to see those entrants coming into the arena. So all kinds of exciting things happening.
Yes, very many exciting things. Looks like I might have spoken too soon on the live front. Seems like there are some issues of people hearing us here. So we'll try to get that sorted out again. At Mixlr is the place to go. I see you in there right now. Hopefully we'll be able to get you. It worked for the last show. I'm not sure. Again, these things, they ebb and flow when it comes online. But of course, the on-demand is kicking as always. So you can get the podcast there. We'll tweet something out there too for all you listening live. Let you know the status of exactly what is going on. But you're right, Sean. It is a big week for all things Recon. And, in fact, it's a weird one because, Sean, it's in and of itself, this is usually, I'm assuming this is why you do it this time of year, usually a relatively quiet time of year. The Friday coming into June here, late June, not exactly a time when the market is lighting things up. So it's a good time to reconstitute a lot of indices in an otherwise quiet time. You don't want to do it in a very turbulent market period. And yet we're having some interesting developments coming into this weekend. Of course, your Recon coming up on Friday happens to coincide pretty nicely with the big G20 meeting. Of course, everyone's eyes in the marketplace going to be on the meeting with Trump and the Chinese leader over there as well. And everyone's kind of hoping maybe there will be a little bit of a thaw, a little bit of an ice breaking there between us and China on the trade war front. So it kind of puts the recon into a little bit more stark relief this year. Are you hearing that from people you're talking to, Sean, as you're going out there, as you're doing the road shows, you're over there in New York getting ready for the big event? That is this one maybe more in the microscope than years past because there's so many other events happening at the same time?
It's interesting, but as we've talked about this with the Russell 2000 and small caps being such a domestic index and pretty much insulated from global situations, and I'm not trying to take away from the direction of the possibility of there being increased volatility during this G20 summit and other events that could be popping vol, but historically, as you know, this print of reconstitution happens at the close, and again, June is historically one of the lower vol months in history. But I think a couple of years ago, recon happened the day of Brexit, and we didn't have an issue with recon, and that was a turbulent time as well. So I think the mechanisms in place at exchanges, along with the closing cross mechanism that NASDAQ has in place with us, enables our investors to make those adjustments to their portfolios in a pretty easy way. So we're looking forward to that smooth transition to once again happen tomorrow.
Yeah, of course, it's not the first time, Sean, that this has been recon time in the midst of some tumultuous periods in the market. Actually, a couple of years, you don't have to go that far back, just back to 2016, when you had your recon right around the time, pretty much hot on the heels of Brexit. And so you had Brexit lighting up the marketplace, and then you had recon coming along and pretty much slinging about 15 billion shares in the span of when all was pretty much said and done over there on the recon side. So I guess this isn't the first time we've seen a recon line up with some crazy events in the market, but it's the first time I think since you've been there, Sean, and it certainly is an interesting one. And I think it makes it a little bit more interesting. If it was just a regular quiet Friday in the marketplace, it wouldn't be as exciting. But now we have some actual events. We've talked about it before. Let's get into the vol. We've been talking about it for a while there this week, that it's been a weird week from a vol perspective. You know, we're seeing the markets rallying. We're seeing vol continuing to maintain its firmness, even in spite of these repeated rallies coming into today. Yet again, we're seeing markets mostly rallying, kind of mixed. What degree they're rallying depends on where you're looking in the indices, but most of them rallying, and yet vol remaining firm again today. Everyone, of course, kind of playing the wait and see game with the big G20 meeting coming in this Friday. Some interesting nuggets. Talked about this a little bit last week, Sean, but we don't get a chance to talk a lot of individual equity names here on this show. But Uber, Lyft, and Spotify, a few others, are doing a notable list of companies that are heading into the Russell 1000 this year. So, kind of interesting stuff. We don't get to talk sexy equity IPOs here that often, Sean, but you guys are making some changes. We also talked last week about how Microsoft trumping Apple, in fact, Microsoft and Amazon. So Microsoft number 1, Amazon number 2, and then Apple number 3. Some interesting things. Is that kind of getting a little bit more play in your neck of the woods there, Sean? People starting to gravitate towards you saying, hey, what's going on with all these names changing place? And the fact that you can actually talk about some of these hot IPOs like Uber, sir, it's got to be kind of fun for you.
Absolutely. It's fun. It's brought discussion back to the Russell suite of products and the indexes, and there's nothing better than there to be awareness and discussion going on our large cap index, the 1000, and our small cap, the 2000 index. And the more they talk about it, the more opportunities, more eyes, the more trading, and more investing that happens in our products. And we couldn't be happier with that. And that also includes the derivatives trading on our partner exchanges, CBOE Global and CME Group.
Let's look here what's going on the equity vol landscape coming into this one of the biggest, if not the biggest, volume day, certainly, of the year. And like I said, it's a bit of mixed bag coming into earlier on Showtime. We have, the producers just popping in here, giving me updates on the live feed here. But we're seeing vol was pretty firm, about 16 and a quarter out there in the VIX space now. Up about 16, up about 1 to 1 1/4 handles from where we were this time last week. The volatility also up this week, up not quite 5 handles, but pretty close. Remember when that VVIX, the volatility of volatility, when it gets close to the 70 handle, that's when you really want to start paying attention to it, because when it doesn't hang out in that 70 handle for long, that's usually the floor. And when it starts breaking into there, things are getting kind of tranquil. Volatility likes to perk up at those moments, so that's the time to pay attention to it. And it's up about 5 handles from last week, up to about an 87 coming into Showtime. The Russell VIX, aka the VIX of the Russell 2000, also up this week, also about 1 1/4 points. So that means that spread, that VIX RVX spread, hasn't really moved a heck of a lot from last week. It's pretty much almost exactly unched. It was about 2.8 last week. This week it's about 2.75. So we're not seeing a lot of movement. Again, small cap vol and large cap vol moving in lockstep, at least for the time being here. Because I guess we're seeing, again, that big G20 is kind of keeping everyone kind of in lockstep, kind of keeping everyone having their powder dry, really, until this big event is done. So that's probably why we're seeing all of these major indices, at least from a vol perspective, continuing to move together here. Big trades out here in the Russell 2000, and in the options-wise, coming into Showtime, it was all in the weeklies, contracts expiring tomorrow, as you might imagine, the big recon, the big G20 lighting things up. And it's actually, coming into Showtime, we're at about a 1546 here for the Russell, so off about 5-6 handles, not a ton, off about 1/3% here net on the week. And we're seeing the 1545 calls leading the dance out here. So at the money calls expiring tomorrow are pretty much where the action is. Let's take that drop down, listeners, over there on the CME Group /TWIFO or wherever you get your quick strike action, and sled it to the E-mini. And let's see the E-mini SP 500. Let's see if we're seeing similar action out there. Remember, I like to choose to select all, but your mileage may vary, whatever you like. If that's too much information for you, I get it. Remember, I'm doing a show, so I need to see all of it. Maybe you don't. I know Nick likes to just do the selections that the platform gives you when you load it up. It usually will pull the most active months, but to each their own. Let's see the big month, the big contract out here. Yet again, same thing as you saw in the Russell 2000. It's the weeklies expiring tomorrow is where the action is. 26% of the E-mini SP 500 options volume coming in that contract. The big trade of the week, let's see, that is the case. Yes, it is. The 2,900 puts, we're at about a 29.32 as of the start of the show. So off about 2/3 of a percentage point for the week out there in the S&P. A little bit more downside in the large caps and then the small caps and the 2,900 puts. So near term out of the money puts leading the tape, about 16,000 going up net here on the week. That's the big print here. Let's keep on rolling. By the way, Sean, I was watching some of the content over there for all things Russell Recon. I saw you guys were out there talking with my friend Jill Malandrino from the NASDAQ Trade Talks, and I saw a lot of people up there. I didn't see you up there. Why were you not? I'll have to call Jill and tell her she needs to schedule some time with you, Sean. What do you think?
Yeah, absolutely. Call Jill. I actually have been interviewed by Jill a couple of times in London, a couple of times during IDX Week, big futures conference that the Futures Industry Association puts on. And I had client meetings. I just couldn't make it. But she's fantastic. She does a great job. It's phenomenal. I think I had a couple of colleagues there that were talking with Jill, if I'm not mistaken.
Yes, Rolf Agather and a few others were there. But I tuned in for you, Sean. I'm tuning in for you to see what the action is, and I was disappointed not to see you there. So I'll have to send a...
Hey, I saved my exciting content and discussion for Options Insider, for TWIFO.
I appreciate that. So, yeah, beaming all the way in. I will be, of course, it's on the holiday next week, so I'm not going to have a show, unfortunately, next week. But 2 weeks from now, we can all gather together in the studio in Chicago, sir, over some nice, delicious burgers, maybe some Gibsons. You never know. Does that sound like a plan, sir?
Sounds like a wonderful idea.
It does sound like I'm getting hungry now just talking about it. So we should probably keep rolling with the show lest I get distracted by thoughts of food and all this other good stuff. Before we keep on rolling, Sean, I know you're kind of knee deep in the Russell. We're going to have some listener questions about that in a little bit. But before we roll out of equities, any other nuggets you want to leave our listeners with, sir? Now is the time.
We're just excited. This is just a fantastic time in the market for folks to be focusing on the Russell index reconstitution. Market cap for the combined Russell 3000, which is the 1 and 2 combined, is up just over 3% to the market cap of north of just almost $32 trillion, $31.7 trillion to put an actual number on it, which is really exciting. The Russell 1 is up, Russell 2 is down, but it's a more volatile domestic index. But it's exciting, and tomorrow's going to be an exciting close, and we'll all be on TV. I'll be ringing that. I'll be one of the guys. I won't be the guy ringing the bell, but I'll be there, and you'll see me on television tomorrow.
I'll be watching for you. Wave a big sign that says Options Insider, something like that, so we know where to spot you, sir. And then
if I had a ball cap, if I had a Twifo ball cap,
There you go. I like it. I like all that good stuff. We usually talk at the end of the show, listeners, about what's moving and shaking every week here over there on the CME group, and that's usually the optionable stuff, so it wouldn't cover what we're talking about next, which is a huge category we just have to get to. I know we already have a show devoted to this on the network, but it's been just a crazy, unprecedented week out there. We got to touch on some crypto. I know, no options on that one, but at least not over there on CME. There are other outlets. Of course, you can go check out our crypto rundown program for all that good stuff, but just huge stuff lighting it up out here in the Bitcoin and the crypto space this week. Coming into showtime as we speak, just huge numbers going up on the CME Bitcoin futures. As of showtime, over 22,000 contracts lighting it up just in the front contract alone, the June contract. Another about 5,000 going up in July. So between June and July, we're talking about 27,000 contracts just in those two. Add on the other months, you're at about 28. So you're pushing, not quite, we're pretty, I think 33 is the record out there, 33,000. So we're not quite there, but it looks like if it stays on pace for what it is, that might indeed be hit today. The futures off nearly 3,000 handles today, Sean, but 2990. It puts kind of some of the Bitcoin volatility we've been talking about of late into sharp relief there. Huge volatility. It's been just a tumultuous week across the board. We saw new highs and then new lows. You saw massive outages. Of course, Coinbase is a big place. A lot of people like to go trade their crypto. They went down on Wednesday. The website and the API both pretty much inaccessible. That's not a good thing. And when that happened, Bitcoin took a huge hit, down 1,700 points in the span of just about 10, 15 minutes. Before that, we saw it hit a high of not quite 14,000, but pretty close to it, 13,900 on Wednesday, and then dropped down to about 11,900. Like I said, coming into today's show now, we're seeing pretty much another 1,000 handles coming off that 10,905 as we speak. It just ticked. It just went 10,875, so the futures are off over 3,000 handles now, 3,010 in the front June contract. So just incredible movements out there. People have been talking about short squeezes and other things going on that have been driving these just kind of unprecedented levels of volume. Again, no options yet. If you want those, I know, hit up CME so they can list them so we could talk the options. But we had to talk the futures. I know, Sean, we talked about crypto before, you and I, and there was a lot of heat on it back, before the big bear really started. The big bear market started at the beginning to the early 2018. Then it seemed like, at least for your perspective, people hitting up Russell with all things crypto, it seemed like it ebbed a little bit. And then now, of course, with the big 1,000-point swing over the past couple of months, everyone certainly seems interested in all things crypto again. Has this maybe renewed or restarted some of your interest over there at Russell and all things crypto? You got any plans going on behind the scenes to maybe dip some toes in the crypto space, sir?
We are. We're always looking at innovative new product and new indexes. Crypto is obviously one that is getting some attention. We're looking at it. We're talking to clients, and we're one of those key firms that listen to client demand and really try to answer and create solutions for issues that our clients are having from an index perspective, and we are definitely looking. So I think that's all I could possibly say at this point.
Indeed, I expect you, nonetheless, sir, I expect you to be looking quite a bit out here because it's a hot stuff. And if you want to break some news, you want to reveal some new products, it's just me and you here talking, Sean. Nobody else. So feel free to just spill all the secrets here. I just had to touch on crypto. I know there's no options, but just so much movement, so much volatility out there. You gotta be paying attention to this space. If you want vol, I know a lot of you guys hit us up saying, "Where's the vol?" Right now, realized, implied, all of it can be found out there in the crypto space. Let's keep on rolling to things you can actually profile and analyze out here on the old TWIFO screen. If you go to cmegroup.com/TWIFO, and then you do the drop down over there to energy, then select the old crude oil. It's been another interesting week out there in crude oil. Then, of course, we're going to select WTI for those of you out there playing along. We like to talk WTI. We talk Brent every now and then, but most of our interest, most of our action, most of our audience's interest is over there in the WTI product. And it has been a week where the crude bulls have been mostly in charge. Coming into showtime, we're seeing WTI at about 59 and a quarter, up not quite 2 handles, but pretty close, right around 3%, a little bit more than that. So not quite breaking the 60 handle, but getting pretty darn close to it. Again, of course, we have a lot of people playing the watching and waiting game. We saw, a nice little run on Wednesday, a little rally in crude. We saw it hit them about the highest levels in close to a month. We saw our data coming out of here about a pretty sizable drawdown in our crude stocks. If you pay attention to the crude market, it's a lot of this will they, won't they, push and pull dance between international demand and domestic supply here, at least when it comes to WTI. And some surprising numbers over there have helped to squeeze the WTI price a little bit. The bigger drawdown, though, helping to give it a little bit of a boost. We're seeing exports also hitting a record high out there and some surprise drops in the refined stockpiles as well. So we saw a nice pop on Wednesday, about 2%, and then some of that coming off here today as we're seeing people kind of, like we mentioned with the equities, kind of bracing, waiting and seeing and preparing for the big G20 summit. We also have, of course, the planned forthcoming OPEC meeting coming up not too long from now. So all of that keeping most crude traders in a bit of a wait and see mode, but enough to lift the product, like we said, about 3%. Vol, we talked about crude vol quite a bit. In fact, a lot of you voted for crude vol in our epic realized volatility poll. And we mentioned we crunched some of those numbers, and pretty much Bitcoin took it. And of course, if that frame of reference for that poll took into account this week, then Bitcoin would have blown the doors off of it, obviously. But Bitcoin taking it, followed by, it was a close number 2, but it looked like it was Tesla, then number 3 for WTI. NASDAQ bringing up the rear, a paltry 18%. Who needs 18% realized vol? And you got things like Bitcoin that were doing, 60 odd and 70%. So a lot of realized vol to be had in the space, but crude has been moving. The vol coming in a bit this week as we're seeing this upside, again, reflecting what we're seeing out there in the skew. The big action contract this week was in the AUG contract with about, not quite half, 43% of the paper going up out there. And I mentioned we're threatening the 60 handle, and it was a 60 handle that dominated most of the paper, but not all of it. The looks like number 2 print was in the 60 handle, but we actually have to go out all the way out to November, to the November contract, the November 45 puts, to see the number 1 trade out here. It was the 45 puts doing nearly 16,000 contracts this week. So pretty sizable action out here for some downside puts. Let's pull it up here really quickly and see exactly how that trade broke down. 1 second, listeners are getting a little bit of a delay here in the Southern Studio Wi-Fi to load up that trade. But it was like we said, the hot trade of the week. These no 45 puts. It wasn't all downside, though, listeners. Here we go. Loading up here now. It was Monday, 2,500 of the 45 puts. Tuesday, 6,000. Wednesday, the big day, 7,000 and change. Today, a paltry 209. So 14,000 and change, almost 13,000 of that opening. So a lot of opening new positioning on that 45 strike there in November. An interesting level. I'm going to probably go out on a limb and say it's probably not premium harvesting. It's probably going to be some buying. We can check in on the skew. In fact, let's do that. Let's check in on the skew to see exactly what happened over the course of this week. And actually, the puts came in a little bit, which is kind of interesting. Remember, we're rallying a little bit now, so you should see the calls come in maybe, and the puts get a little bit bid, if that is indeed following the normal skew movement and rotation. But what we saw were the puts here in November were 9.3% cheap to the, 9.3% rich to the at the money, and this week they're 8%. So actually they did come in, which is exactly what they looked like. So it got inverted here on my screen for a second, but it is actually the way we thought. So they came in a little bit, and the calls were 7.1% rich, or I should say cheap to the at the money this week, 6.2%. So the calls got a little bit bid, and the puts coming in a little bit, which is kind of interesting. Interesting paper out there, but then again, so maybe that was some harvesting on the 45 strike. We'll have to dig into those blocks maybe a little bit more to know for certain. So maybe someone drawing a line in the sand there, listeners, on the 45 strike. Let us know what you think. What would you like to do? 45 puts, buy them or sell them out there in November in WTI. Do you look at like that level for a hedge? Are you concerned about retracing down to those levels, or are you perhaps thinking that's a safe level to maybe draw a bit of a line in the sand? The other big print we saw going up this week were the 60 calls. People liked themselves some even level trades, and these 60 calls were going up for pretty decent size out here in August. They were the AUG 60s, about 13,000, 12,800 to be precise. Looks like they were pretty fairly scattered throughout the week here. The lion's share coming on Wednesday, about 4,200 of them. 3,700 today, so pretty active contract going up today. Looks like slightly closing on the week, so a lot of back and forth, as you would expect, on that 60 strike here in WTI throughout the week. Since that was the lion's share of the action out here, 43% going up in that AUG contract. Let's check the AUG skew really quickly as well. The puts were about 5.8% rich to the at the money this week. They're 4.9%, so coming in at nearly a whole point there on the downside. And the calls were 3% cheap. The at the money now about 0.5% cheap. So the calls getting a bid, and the puts coming in a little bit. So interesting stuff out here. Crude vol is an interesting beast. We talked about it before. It's worth watching if you're into the vol space. There were some products listed on this. They've kind of gone the way of the dodo. We talked about it before. Maybe we'd like to see those come back, because I think the death of those was premature. There's certainly enough action, certainly enough interest, certainly enough movement in the energy volatility space to merit listing of a product or two. Really quickly before we keep on rolling, there's a lot of things going on here. Looking at the movers and shakers this week over there on CME. To the downside, number one to the downside was going to be the lean hogs, off 4%. But number two is going to be the soybeans, with about 3.35%. Of course, if you've been paying attention to the ag space, things have not exactly been living up to the hopes and dreams of the farmers here, planting corn and soybeans and everything else. So let's check it out for ourselves. Go up to the drop-down, listeners, hit the ags tab, head on out to grains and oil scenes, and let's go out to soybeans. We can do meal, oil, crush. Let's go straight to the beans themselves. That is the top selection there. Again, select all if you want to see all of that goodness out here. And, of course, it's been an interesting time. Soybeans, of course, ground zero for all things trade war. And with the trade war in stark relief coming into the weekend, everyone's watching the beans yet again. Coming into showtime, 893.75. So off about 14, nearly 15 handles on the week. It puts them off about 1.5%, a little bit more than that. Seeing the vol out here, a bit of a mixed bag. The front portion of the curve, which is mostly gamma, is up a little bit, but the rest of the vol looks like it's coming in pretty aggressively, off about a point, if not two, depending on where you're looking out there on the term structure. So vol coming in this week, which is interesting given the fact that we still have, of course, the big G20. If there's an announcement on that trade war this weekend, I would think there'd be some movement in the beans. You might want to keep a little bit of your powder dry, maybe want to keep a little bit of that juice intact going into the meeting, but apparently if these numbers are to be believed, and why wouldn't I, then it seems like people are taking off some vol going into the big meeting this weekend, which is kind of interesting. In terms of action, the lion's share coming out here in the AUG contract with about 41% of the paper, and we said we're at about 893, almost 894 coming into showtime. The 920 calls leading the charge here with about 7,000 and change lighting it up. These have about a month to go. Let's look at the skew out here really quickly. The puts were 5.2% cheap to the at the money this week. They're 8.6% cheap, so they've gotten cheaper by over 3%, 3.4%. The calls were 8% rich to the money last week. This week, they're almost 9%. So coming in. So calls getting bid, puts getting cheaper. Kind of interesting, maybe reflecting the fact that we've come off a little bit, some of that concern coming off. People looking maybe spec a little bit to the upside there. But some interesting swings out there in the AUG beans skew out here. Let's do one more really quickly before we get on into your questions and all that fun stuff. We already talked WTI crude oil. That was, of course, number 3 on our top 5 movers and shakers here this week, up about 4.25%. Number 1 was actually RBOB, good old RBOB, up about 8.5%, and Nat Gas, number 2, up 7%, followed by crude, 4.3%. Then good old palladium. Talked about palladium before. Not really a huge option story. Not much to parse there, 4%. And number 5, heating oil. So mostly energy in the top 5. The bottom 5, of course, soybeans, soybean meal, lean hogs, number 1, off 4%. And then Eurodollars also off there as well, and soybean oil. So all beans to the dark side here. Let's do a quick check-in. I know a lot of you guys, like yourself, some of the shiny stuff, so let's get to that really quickly. We talked palladium on the movers and shakers. It's not really a huge option story, though, so instead let's take that drop-down, listeners, over there to metals. Let's go to precious metals. Click on gold. Let's see what's up with all things gold. Of course, we are north of that magical, mythical, much-watched 1,400 level yet again this week. And feeling a little bit of a net rally on the week. Gold up about, looks like about 10, almost 11 handles at about 1410. So, we were threatening to break that 1,400 level, but so far, at least, not so much. Up about 10 handles to about 1410. So keeping us above, north of that 1,400 level. The big contract, the big month out here was, once again, in that AUG contract, listeners, with about 30% of the paper coming up there. And looks like 14 half calls leading the charge this week. Fairly decent paper, about 13,000 of those going up this week for our number 1 print. Again, you talk gold, it's mostly upside, and that's kind of the story that was going on here this week. Quick check-in on gold skew. We like to talk gold skew because it actually changes and moves. Coming into the show last week, it was 7.2%. The puts were cheap to the at the money. This week, they are 8.8% cheap to the at the money. So puts getting cheaper, almost 9% cheap to the at the money, whereas the calls were 10.2% rich to the at the money. Now they are 13.3%, so getting 3% lift. So the calls getting more bid, the puts getting offered. Interesting stuff. People are, again, piling into the upside there in gold. And remember, that risk reversal that we're talking there, that skew is priced off a 25 delta put and a 25 delta call. So it's a net 50 delta risk reversal. If you're asking where are these calls and puts you're talking about, that's where your traditional volatility skew risk reversal is going to be measured. Really quickly, we like to go a little bit farther out to see if there's some funky prints. Oh, lo and behold, there are 2,000 calls lighting it up in several places. June 2020, June 2000 calls doing 8,600 contracts this week, listeners. So kind of interesting and worthy of note. Not the only place people are playing on the 2,000 strike. Also all the way out to Dece of 2020, where we're seeing 1,000 of those going up as well. So if you want upside in gold, I keep wanting to say crude. If you want upside in gold, then this week people have it in spades in terms of June and Dece of 2020. The 2,000 strike. Let us know what you think about that, listeners. That's a fair move for gold in the span of roughly a year to a year and a half. But it's not out of the realm of imagination. Are you a gold bull, gold bug out there? Let us know what you think if that move is viable. Meanwhile, you're going to let us know what you think right now in terms of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, welcome to the Futures Options Feedback. Hopefully the live stream issues, you guys are hearing us there, and it's sorted out and appears to be working. You never know with some of these crazy ones here going on, but it looks like it's all working over there. So you guys can listen live, of course, after the fact on demand. You will notice nothing different. Okay, first question here comes from Dazzne. Dazzne wants to know, can you explain how the FedWatch tool actually works? Yes, I can, but I think it's more fun, obviously, the FedWatch tool pulling the numbers from the actual marketplace for those products, which is fun. It's what we like to see in terms of actual analytics. I could break it down for you, but I'd much rather wait for Nick to come onto the show because that's his product. I don't want to talk his product. He and his team actually built the new FedWatch tools. I want him to walk you through, I think, some of the nuances that are going on out there, which are kind of fun. So, Dazzne, if you don't mind, I'm going to table your question until I think Nick will be back on the next show with us, and he'll be able to break down exactly what they did to make the new FedWatch a little bit more valuable, a little bit more reasonable, a little bit more interesting for you guys out there. Again, it's going to tell you the probability of what the market's pricing in for the Fed to cut rates or raise rates, keep them the same. It's a great tool. If you're looking at the Fed, it's certainly a tool you should be looking at. It's kind of the only game in town from that perspective, and Nick and his team built it, so I want to make sure they get their moment in the sun. So we're going to save that one. What was it? Dazzne, if you don't mind. Meanwhile, Sean, here's one for you. Hope you got your question answering pants on, sure. Actually, it's literally for you. They mentioned you in the question.
I'm ready.
Okay, ELE3S. I'll let you do your acronym soup with that. ELE3S wants to know, what does Sean think of the new micro futures Russell products? Are there more planned in the future, and when does he expect options to be listed? So a little bit of a three-fer there for you, Sean. What do you think of the new micro future? You touched on them before. Didn't touch on them this week. What are your thoughts on them? Do you think there's more coming? And when can you give us some insight into the options, sir?
First of all, to answer the first question, am I excited about these? I am extremely excited about this product. And again, I'm CME alumni. I'm with FTSE Russell now, but I couldn't be more excited for Tim McCourt's team that has and CME Group as a company to launch the most successful futures product suite of products in the history of the exchange in terms of volume and open interest. I mean, my hat's off to Terry Duffy and the entire CME Group team that was behind this launch. So Russell Micros, I'm incredibly excited about. The interesting thing about these products are, they're smaller, they're 1/10 the size, they're have kind of a real retail ring to them, but from an options trader perspective, they offer the opportunity to really surgically hedge that delta of the Greeks. And Nick, if he was on the phone with us today, could get into some granular detail. But having that smaller notional cut of hedging is an incredible tool for not just the small trader, but for the institutional trader as well. Options, good question. The CME responds to client demand, and I'm absolutely sure they're looking at it. But again, they are very, very scientific when it comes to new products and launching, and they have become experts at what's going to be extremely successful, what's going to be most liquid in the marketplace, and I'm sure that they're going through that analysis as this product continues to trade and grow. But again, I think their key ingredient for launch of an options product on these smaller products would be the clients asking for it. So that's just Sean talking with Tim McCourt from CME's. I kind of grabbed his hat there and put it on for a moment, but I know I'm that's my opinion. Let's leave it at that.
It's a very fancy hat you're wearing there, sir. So well done to you. It's very, very well coiffed. But I have asked Tim that same question on this show. And he's talking. It sounds like I think they're a little surprised and pleasantly, of course, by the interest in these products. They've said many times this is the most successful new product they've launched in the exchange history. So that should tell you something. about how active these things are and how much. And then you're right. It's not just retail. It's a small size contract, so that makes you lean retail when you're thinking about it. But obviously, the numbers that are going up, it can't all be retail. It's got to be some institutional players liking this too. So that's probably going to lean towards options coming sooner rather than later for these products. Again, we don't have a date. I've asked Sean and indeed Tim on this show multiple times. Hopefully, we'll hear more about that soon. But I think ELES3. I think if you're excited about the options, clearly a lot of people are. I think they'll hopefully be coming sooner than you might expect, given this just explosion of interest in these products. Speaking of explosion of interest, we got Omar. Omar asking, does the recent Bitcoin spike make CME more likely to list additional crypto futures like ETH? You know, I've asked Tim. Tim has the domain this week. He has the equities and he has the crypto, so he gets to answer both of these. I've asked Tim on this show this exact question. I've asked Julie and some of the other higher ups at CME this off the show, and the feedback I get hearing and talking to them is that they were already more interested in listing more products like an ETH future than they were in listing options on the Bitcoin. I'm personally more interested in the options on Bitcoin, but hey, we'll take what we can get. If they want to list more crypto products, I'm down for it. I think the movement, we just talked about the volume. Let's do a quick check-in again to see how those volumes are looking as of coming into the tail end here of the show on the CME Bitcoin futures, but the product is moving like gangbusters today. And let's see here. Yeah, it's off 3,040 handles now to 10,845 in the CME Bitcoin future. 22,500 in the front month here, and about 4,500 in July. So again, talk about 27,000 or so, plus about 1,000 more. So still at about 28,000. Might threaten that record for today, but again, these kind of numbers in terms of volume probably going to make them at least scratch their chins and say, we might want to list more products in these. So I would, again, I don't know for sure. I've asked them. You've heard me ask them, listeners, so you can hear it for yourselves. But I would think that this, certainly the move to 13,000 from 3,000, it's better at these levels than it was at 3,000 for client interest, for client demand. All the things Sean just spoke of with the micro futures also apply to the crypto futures here. If clients want them, then they're going to start listing them. And certainly at these levels, we're seeing a lot more interest in these products overall. So I would think, yes, in general, I would say yes. The move we've seen since March from testing the lows around 3,000 all the way up to, 5,000, then 7,000, then 9,000, then 10,000, now 13, then back down to 10. All of that, I think, probably has, unless this downside move just lights things up to the downside again, then that might change things a little bit. Maybe there's some other things going on in the marketplace. But in general, I would say the resurgence of interest, we've seen it anecdotally here on our network. I'm sure CME has seen it in their aggregate feedback on social media and from clients as well. People are interested in crypto, so they're going to want to have products for that. Let's wrap it up here on this one. Adam Sam, he actually wrote in a little while ago. I apologize, it took us a while to get to your question, Adam. But Adam wanted to know, he says, hello. Well, hello, Adam. He says, I have a question about the best way of hedging for day traders. I want to short oil, he puts in parentheses, or anything for that matter. So he wants to just be short, I guess. What would be the best way for hedging using options? I would short the oil future, but want to protect the upside. Would you buy in the money calls, right out of the money puts? Considering that I am day trading, would you recommend hedging using the shortest expiration or go further out in the month? I've had, and we've had on this show, variations of this question a lot. There are a lot of you out there. The futures are very much short-term instruments. Obviously, you could take them longer term. There are longer-term contracts, but a lion's share of you out there using these contracts are doing short-term speculative type trading in these products. You're day trading. And so that brings up a lot of you asking, hey, what he wants to know. What is the best use case for me when it comes to options? I'm excited about the options. I listened to your show. You got me intrigued by the options, but I'm living tick to tick in the futures. How can I make the options work for me? And that's a reasonable question. Options were not really designed for that immediacy type use case. They're more designed for a little bit longer term. When they were first listed, the month was as short as you can get them. Now, of course, you can get them in the weeklies, and there are effectively dailies in some of these products that are in the indices and others. So the latter portion of your question, I would recommend going shorter duration. There's no sense of you. If you're living tick to tick, let's say crude oil. Let's take crude oil for an example. If you're trying to scalp ticks in the crude oil and you're short and you want to put on some protection to the upside, There's absolutely no sense at all, particularly if you're only going intraday and you wasting time and money and on longer term, higher premium contracts that go out a month or longer if you're only concerned about your risk in the near term. Keep your expenses and your outlays, because you're looking at a hedging, so you're talking about expenses here. You want to keep those outlays as small as possible. So stick to the nearer term. There's a ton of volume, ton of action. Crude is a good example, but other products do this as well. There's a lot of interest in the smaller duration contracts across the board in pretty much all the futures options we talk about here. So you don't have to worry about liquidity from that sense. So stay near term, keep your hedging costs as small as possible. Then, of course, if you're trading your futures, and that means you're babysitting it, you're watching it tick by tick, you have probably a range at which you're concerned about these things going against you. So if you have your range for the futures where you're going to get out, you probably also want to do something similar for your hedges. If you just buy a call, it's going to be a lot of money you're putting on the outlay. If you do a weekly, you probably want to buy something that at least has a little bit of time to go in that week. So let's probably, if you're going to do a weekly, let's have one that expires at the end of the week, not today or the next day, because guess what? That if you buy a weekly that has about a day to go, that's going to decay aggressively. You want to keep some of that intraday decay to a modicum. Again, you don't say how long you're holding these positions. If you're only holding them for a few minutes, then decay is kind of an irrelevant factor for you. But if you're going to hold them throughout the entirety of the day, then maybe a weekly that has a little bit more time to go, like towards the end of the week. So that's a little bit bad, or say towards the beginning of the week rather than the end of the week. So you have more time. If you buy the last day of that contract, it's going to pretty much decay to zero, and you're going to lose all that value. So that's something to be concerned about. But don't go out and buy months, because then you're going to end up spending a lot more for not a lot. And then if you're very concerned about premium outlay, also I think a vertical is a good way to do it. If you have here's where I'm short the future, I'm concerned about a move into this realm and the upside, buy the call here. You could sell a farther out of the money call, I should say, against it. That will reduce some of your outlay. You can get fancier and a little bit snazzier with your hedging if you want. You could buy a little bit longer term, and then that way you're spending a little bit more for you, but you're insulated against the decay. So you could go out in the monthlies, for example, and buy a monthly, and then you still have that premium issue, so you then turn around and sell weeklies against it, as a way to, you could do 3 or even 4 contracts against that monthly, so that'll offset a lot of your outlay, maybe even get a credit for you. The problem is that's a little bit more sophisticated. It requires a little bit more babysitting. You have to be able to understand things like calendars and diagonals and how that short leg in the near term really is going to work against you. But if you're a futures trader, you're primarily concerned about delta and the changes in that delta, aka the gamma. So gamma is what you want from your options. So you're going to want to stay in your hedges in the near term, which is in the near duration weeklies. That's the best way to go about it. Yeah, I don't know about buying in the money calls. If you're short and you're buying an in the money call, you're kind of locking in, some of that. You might give yourself a little bit of room, I think, to run. It's going to be more expensive, obviously, on the in the money side. So it depends on your level of concern in your product. If you're extremely concerned about explosion to the upside, you want to keep it close to the at the money strike. I don't know if I would go in the money. That's a lot of extra premium for not much reason. Go at the money, maybe a little bit above out of the money, unless you're really concerned. Again, you should maybe write with a little bit more specifics, which market, what degree of concern you have. But in general, rules of thumb for futures guys using options to hedge. Keep it cheap, so keep it near duration. Don't buy the last day of the weeklies, though, because that's just going to erode to nothing. Give yourself maybe a few days to a week at least to protect yourself against some of that decay. And then if you're only putting it on for a few minutes or an hour or two here or there anyway, it's not that big of a deal. If you're going to put it on a little bit longer, do a vertical so that you can offset some of those hedging costs. And if you're pretty savvy, you understand options, you can maybe do a little bit more with some of those diagonals I was talking about earlier. Check out some of our shows like Options Playbook Radio and others where we talk about diagonals and things like fig leaves quite a bit, so you can get into some of those there as well. Unfortunately, that's going to do it for our question segments. Keep those questions coming. We got a bunch more here. Maybe we'll do an all Q&A segment one of these days. But before we go, Mr. Sean, I know you got your big day coming up. Russell Recon is upon us, sir. Any last nuggets you want to share with us before we go? Now is the time, sir. The floor is yours.
Thanks. So it's, I just have to say it's just fantastic to be on the show with you, Mark. And once a year we have this incredible event, and we couldn't be more excited. This year's you have volatility in the market, as we've said historically, hasn't really affected the ability of our investors to get in and out of these stocks, just simply because of the mechanisms in place at the close, which is a good thing. It's going to be an exciting day tomorrow. So I look forward to be at NASDAQ in Times Square for this ceremony, and look for me. I wish I had that FIFO hat. I'd be wearing it. But again, thanks again for a great show today. Really enjoyed the discussion. It was an excellent question by one of your guests, and I can't come up with the acronym. I'm pretty good with this stuff. Nick and I go back and forth on trying to translate some of these license plate type of names, and that one's got me. But I look forward to being on the next show.
ELE3S, yes. And speaking of next shows, there won't be a show next Thursday, obviously, because that is the 4th of July. So Sean will be off doing his patriotic duty, as will I. There will be no show. We'll be back again in 2 weeks. Hopefully we'll have Sean in the studio. And on behalf of Sean and Mr. Nick, who's out there on assignment somewhere, and our friends at CME, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. Hopefully the stream stayed up for you the whole time. If not, let our friends over there at Mixlr, MIXLR, on Twitter know. And we'll see you back here in 2 weeks for more of This Week in Futures Options.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.